So I don't know if you have any thoughts about if you were to
Yeah.
start like a fund of funds today, how would you do it?
Yeah, that's actually an amazing question because I don't think that I have necessarily explicitly thought it. And so you're going to get something kind of a little raw here. Um, I think that, I think that like Greenspring arguably survived through what, was probably actually a very difficult time for fund of funds. And I don't think it was as clear at the time it is now. What we were doing to evolve in real time, and all of those. There were many things, right, and those are less important. I think that the point or the outcome of them was in most all cases the same, which was be a valuable partner. And so I think that like that's a pretty generic thing to just say, and I think even at that time we were, to your point earlier about like sort of, measuring and keeping track at least of sort of things that have happened and maybe outcomes that were tied to them. And so that was what we were doing. We were saying like being very clear to GPs about like, here's what, we offer, or here's what our relationship up to this point has done. And that's why we think that, we should get a bigger bite size out of this fund. And so, I think that remains strong for me 10 years later is, being a good partner. But like, what does that mean, right? I mean, it's pretty generic in the absence of being able to say it. And so I guess now with the viewpoint that I have, I think that and this is just sort of a, catch-all answer really in this market, because at this point, like, working on the technology side of it and looking for opportunities, it's, it's bound to be something with technology. And I'm really obsessed with this idea of what has been called, and I didn't coin it this, and I think it's a little awkward for some people. I happen to like it. So, which is like Tinder for alternative assets, right? In the context of like making matches with people who want to, find each other, but which, right now don't have an easy way, right? And so introducing LPs to GPs, introducing, sort of whatever. And so, I think that there's like, if I were to go start a fund of funds right now, and you're catching me sort of, answering off the cuff, I think it would be the combination of two things, like really focused on like a value add relationship with proof. And that probably it would take the form of like technology driven ways to kind of keep the GP happy. Like, here are LPs, like let us sort of use technology to not only kind of facilitate these things, but also to kind of come back to them and look at them in the scoreboard, say like, hey, this is like what we did for you. Remember all that, great, all those great things. So I think the same is true on the flip side, right? Of like which investments are you making? We were always very data driven, and Greenspring remains it, and much more so today. But like, I'm convinced that we're headed for a world where, algos are making most of the investment decisions in the under not that's going to sound ridiculous to some people. What I mean is that the edge to find new managers, their underlying assets,
That I agree.
whatever.
I agree. It's
Like,
basically high quality, high fidelity, top of the funnel qualification. That where you are, but then you got to get human. But the top of the funnel can totally be identified and automated. And to your second point, I think you're spot on what will be created as a next generation product. And I caught up with him a week and a half ago, and we're doing a deeper catch up soon. And I really, really respect him and like that guy, Samir Kanji. That was at First Report. He started this company called Allocate, which it sounds like something like that. And for me, someone that I've raised money from extremely organized institutional investors. I've also raised money from people that were just very successful entrepreneurs. They're just rich. They've never invested in the asset class, and I had the privilege of them trusting their capital with me for the first time when they were doing venture. And certainly, the first profile, in many ways, is better. But there should be a systematic product, just like how you open up, your app, whatever app today, and you can buy a stock or you can buy crypto. you should be able to become an LP in whatever you want, and someone qualifying that for you. I did not grow up with I didn't grow up poor, but I did not grow up with a lot of money in Brazil, and I see some of the investment decisions that my parents make sometimes, and I get very frustrated. So now I've been helping them a little more actively, but the democratization of the asset class with the automated discovery mechanism, I think it's basically the super product, in conjunction with a community that helps all the investors that are starting firms or scaling firms continue to be good people. Because what made me believe that I could be a successful VC was when I was at working at FCVC, a Funders Club, and I saw that the top 10 firms continue to be the same top 10 firms, top 15 firms, because they hire maniacs that are healthy workaholics, that are obsessed about the craft. And they're not just there for the money, they're there for the game, and that's the motivation. But then the minute that you continue to drop off that echelon, the work ethics, they do change. You start having way more ego and just people that are connected with the business in a different way, which continues, in my opinion, to make it very possible for a bunch of different managers to rise and shine.
Totally. Love that. Well, and so for, recent history for us, right? I mean, we have a presence in, enabling sort of external, we call it a lot of things, but at a simple level, enabling external engagement, right? So we're sort of saying, okay, well, you need the things that are sort of keeping track of what you're doing internally to find, new opportunities and find LPs and all those sorts of things. But really, the sooner you can get to, actually creating some real estate outside of your organization that is technology driven. Now, I've used the analogy of the LP GP relationship. I think there's going to be a part of the market where, to your point, you open an app on your phone and you get there. But for the big sort of institutional relationships, I've used the analogy that it's a little bit like a marriage, right? I mean, you don't sort of get married on Tinder. You're really there to sort of put in your things and then have it match other people, or at least kind of estimate who you match with, and then you kind of have some choice, and then you go on dates, right? And so I think that there's a part of the market that's super interesting in terms of if I'm setting up a data room and I'm a GP, don't you just, it's so limiting, psychologically, to think okay, well, we're gonna have to go find these people to invite to it, when the reality is there's probably a whole bunch of people out there that would love to see it, and seriously, they would actually take a good look at it, and that's what's interesting to me is how do you start to get people who would you wouldn't have to do all the work, if you've already got it all posted up and set up and they want to take a look at it, let them sort of swipe right or swipe left type thing, yeah. And then there's some sort of meetings and some dating and whatever, and then you get married. But the role of technology and it, as we sit here right now, none of these things are really happening at all. And so that's the point, is come on, it's not going to stay this way. It's going to change for sure.
I do think that the proxy of that today is the ability of being creative and insightful with content through social media. It's this generalized thesis that, influencers are becoming investors and investors want to become influencers. It's a wide spectrum. You can have Sequoia and Benchmark partners trying to out-meme each other on Twitter, all the way to people doing, frankly, doing what we're doing here, which is a different approach, but you're to try to build credibility and notoriety in a different way, so that discoverability gets a little bit easier.
Sure.
But I think that the question here is, you don't want to be in a situation where, let's say Cambridge Associates, for instance, right? I've met with them a few times, think they're great, been in the business for so many decades and so forth. But It's a very conservative way of like trying to figure out who is next or who's coming, up and running. And it has wonderful product market fit for them, and it works really well. I want to be in a position where, because I love learning, and things are happening so fast that in a situation, let's say 5 years from now, and I'm in a position where Appman has a fund of funds. I love to have a fund of funds only for 19-year-old kids, and give them money, and and let them invest because we think they're brilliant. They're very motivated. In how to find them, right? Yeah. Where you get the original data source, right? Because I remember, for instance, when at one VC we did a bunch of growth, and we'll continue to do this at Appman as well, just a bunch of late stage SPVs as well, as a marketing instrument to actually raise more capital versus just being that manager just says, "Oh, trust me, give me money." It's like, no, I have an exclusive opportunity that very few people have access, and I have a fund. Would you like to talk, right? So start getting inbound from a bunch of large hedge funds. This was, I think, before the whole, the trend was happening, but it wasn't as evident as it is today with, Coatue, D1, Tiger, and so forth, kind of like investing everywhere. And I was like, the guy was basically, if you have access and you're structuring a very large SPV, almost like what Industry Ventures does as well, right? They're like, I'm happy to fund the whole thing. I manage billions, and frankly, the returns in the public markets aren't the same as they used to be. So I gotta put money to work. And I was, how did you figure out that I existed? I asked him that question. To your point,
I love that question. Just in the abstract, right, with no context.
Yeah, I was like, "Where the fuck did you find me, man?" And then, and funny enough, our offices in San Francisco were across the street from each other. I kid you not.
No way. Wow. It's that sort of stuff, man, right? Like, come on. And so, like, the things that technology are doing at scale for the world right now, and that's not in it. That's the thing that for me continues to be like, there's a huge problem to be solved there, and it's going to be solved, right? I mean, we're in many ways working on solving that.
Exactly. Yeah. And the answer to his question was that he leveraged the PitchBook API, trying to find the entity names that would say anything such as growth SPV or what, and then he just combined with a bunch of different tag words and so forth, and then he had a list and just pinged a bunch of people, assuming that these guys are probably seed investors that are very hungry, and they're good because they managed to get access. Like when we were doing some of these SPVs, we were taking allocation from Andreessen and Tiger. Anyway, but then
cool. I love that.